Bank of Canada released the summary of its deliberations for its June 5th rate announcement. Of course, the bank cut interest rates. The summary reveals that the Governing Council thought about waiting until July to lower rates. They discussed the risk that inflation progress may stall or at least sputter, as it has in the US, although inflation trending down recently south of the border. Let's get more from Benjamin Tal, Deputy Chief Economist at CIBC. Benjamin, great to see you. I guess it's logical they thought about waiting till the summer, but interesting that or till later than the summer, but they thought they'd go now. Do you read anything into that?
Yes, it was a relatively close call. You know, some people were obsessing about wage inflation. The others were talking about the economy slowing down. So it was a close call. I'm not surprised that they move in June, and I think they will move again in July. The focus, of course, is the labor market and the fact that wages are still elevated. And if you are a central banker, you are biased. You have an option, a recession versus inflation. They will take a recession any day. And therefore, it's not symmetric. If there is a risk that inflation will reignite activity, then you have a situation in which you want to make sure that you overshoot as opposed to undershoot. And that's the dilemma at this point. Having said that, I believe that July is another move. But the big question, in my opinion, is by how much can you divorce yourself from the Fed? In the statement, in the deliberation, the Bank of Canada is saying, of course, we cannot remove ourselves from the Fed forever, but there is enough room there. I'm not so sure. We have a situation in which, on average, the spread between the Fed and the Bank of Canada is 100 basis points. If the Bank of Canada moves in July, we will reach this 100 basis points. Beyond that, the dollar will go down with inflationary risks. So it's getting complicated.
Let's talk about wages, because wage growth in Canada is still pretty high. When you adjust for the type of positions, it's still increasing at a pace of almost 5% year over year. And that seems paradoxical when it looks as though our labour market has loosened up decisively. But you say there's an explanation here.
Yes, first of all, yes. If you look at the overall labor market activity, it's nothing to write home about. You know, we're talking about the unemployment rate is rising. If you look at the, being unemployed is a function of two things. One is becoming unemployed, and the other is staying unemployed, namely the inflow into unemployment and long duration unemployment. Both of them are rising, which means that it's sustainable. The unemployment rate is rising. That's exactly what the Bank of Canada actually would like to see when they raise interest rates. If you look at the quits rate, the rate at which people are quitting, it's back to 2019 level. The vacancy rate is back to 2019 level. Everything is telling you this housing market is slowing with the exception of wages. And I think it's a cyclical story. There is a lag aspect here, but much more than that is the mismatch in the labor market. I think that people are underestimating how tight some segments of the market are when it comes to shortage of labor. So we have surplus of labor, but we also have shortage, which is more permanent. And the way you look at it, you don't look at the vacancies because it's easy to press a button and you say, I need 5 people. What you need is to look at what's happening in real life, namely wages. And you look at the unemployment, and whether you see the better performance in unemployment by occupation, and we found that occupations that employ 37% of the labor force are facing some sort of labor shortage. That's inflationary.
And these tend to be higher, did you say these tend to be higher wage jobs for more highly trained or educated people?
Yes, to an extent, yes. We're talking about the health sector, we're talking about transportation, finance, clearly construction. So you can predict which occupations are in the shortage at this point.
Is the mismatch out of proportion to history? I mean, is it big these days? I guess there's always going to be some kind of imbalance in the labor market.
Yes, if you look at 2017, before COVID, and today, it's basically higher now today. It's double. And I think it will get worse and worse and worse because the nature of the economy, the demographic story, people are retiring. We all know the story. That we are going to have some structural change in the labor market that will be more inflationary. So we have many things happening. We have deglobalization, we have just-in-time inventories, and now we have the labor market that is less giving the way it used to. That will put downward pressure on profit margins, but also upward pressure on inflation. And that's why after this cyclical story is over, I think that the permanent level of interest rates will be much higher than it was before. We were at 175 before that. We went to 475. We are going down to, I say 3. The new normal will be much higher than before. Part of it is because of this mismatch in the labor market.
I mean, would one fix be to reduce restrictive practices, engineers, doctors from outside Canada finding it hard to get qualified or certified to work here?
Absolutely. Part of it is getting the education system to align with the shortage in the labor market. We have to rethink education. We know the labor market is changing at the speed of light, and the education system is behaving like nothing happened. We have to rethink education. It's not just computer engineers. It's also plumbers. It's also electricians, trades. We have major shortage in construction. We are talking about a housing shortage. We don't have the manpower to actually fill that gap. So a lot of things can be done in order to ease the pressure.
Apparently hundreds of thousands of kids leave high school without completing it in Canada every year. It seems like we should stop that. It seems like a national scandal that any child should leave high school early in Canada.
Absolutely, and we have to also think of different methods. If you look at the German model, in Germany you can have a BA in history and a minor in plumbing. Oh. You need to break the negative stigma associated with trade, with colleges, and basically let it be part of the system under one umbrella. So I think that if you look at productivity in Germany, it's actually improving and higher than in Canada. Part of it is because of that. Canada is the most educated country in the OECD in terms of the numbers of people that going to university. But we are also, listen to this, the #1 country that has the highest level of educated people that live in poverty. Yeah. So we cannot translate those degrees into jobs because the education system is not really aligned with the changing labor market.
I guess